Welcome out to a Friday edition of the Tackle Trading Halftime Report. As always on a Friday, this is Coach Frank hanging out with the one, the only, the mighty Coach Matt Justice as we get ready to navigate these markets. But before we jump on in, welcome out Team Tackle. Hope everybody's had a fantastic week thus far. Great to have you here. If you're new, welcome. Always helpful to hit that sub button so you know when we are going live. And if you like what we're doing, hit that like button, share it with a friend if you think it'd be useful. All of that fun YouTube stuff. We certainly do appreciate that. Boy, that energy chart is a thing of beauty, Coach Matt. But before you geek out, how you doing today, partner?
Doing good. Excited to be here with the crew to break down the last day of the week. It's always good to hang out with the crew in the halftime report, breaking down the market activity on a day in, day out basis, and excited to be here to come to a conclusion this week as well. Energy's obviously been on the mind. Best performing sector over the last month, quietly, not so quietly here at Tackle Trading. We talk about this all the time. But the amazing thing, Frankie, and I was thinking about this morning, we talk energy all the time, but specifically that mid-tier breakout we talked about and dialed that win in for a while. Yeah. And energy right now is the best performing sector today. It's the best performing sector this week. It's the best performing sector this month. And I haven't heard a peep out of the financial media regarding this move in energy. They've all been talking about the retracement analysis in semiconductors that we're just like, let it retrace. Yeah,
do a thing.
This one here looks pretty good. And I kind of have a feeling, Frankie, by the time they do start talking about the energy conversation, now we're overextended and we're going to be talking about, but now it's time to lock in a little bit of profit and wait on that secondary pattern here. But energy looks good, and it's about time we get a little bit of momentum in this space.
Yeah, a little bit of momentum. That's an understatement of the the understatement of the day is them going to be late to the party. But if it wasn't, that would be you're going to be seeing that in a week or two. How come no one was talking about energy? Well, follow it. Follow Tackle Trading, and we'll make sure you are. Absolutely.
We don't miss mid-tier breakouts. There you go.
No, sir, we don't. And we do love dialing in some energy. There's no doubt about it. Been a fantastic move. Well, Matty, let's start with the indexes, my friend. Just been one of those. It's kind of been one of those weeks from a broad market perspective, right? Kind of saw a little upward movement, was a little not ready for prime time. Now you're getting kind of that little retracement, as you kind of alluded to earlier, in large part kind of led by growth, right? Semis in particular, but I would say growth in general.
Right now.
Yeah, there's a little bit in there. As we're watching this retracement develop, you really dialed in, and I got to hang out with you while you did it on Tuesday in the coaches show, kind of the retracement. This is exactly why we have that conversation, right? Depth of retracement is going to matter. Looks like we're kind of working into, the day's not over yet, but looks like we're probably going to be dialing in more of a traditional versus a shallow retracement, just based off of where we sit currently, at least to my eyes. So if you didn't have a chance to catch that coaching show and you struggle with retracements, catch that recording. It'll really, really be helpful for you. Dialed it in very nicely, Coach Matt. What you seeing here?
Yeah, when you're dealing with retracement analysis, there's certain levels on the chart that you're going to track. Oftentimes, you're tracking the moving average conversation in conjunction with something else out there, whether it's a Fibonacci retracement level, not exactly clean on the Fibonacci retracement levels. There hasn't been exactly proper momentum here. Breakouts, fakeouts, fading action type thing. But typically, you're looking at moving averages in the retracement in conjunction with either previous pivots, significant hold numbers, or Fibonacci levels. When you're just looking at this from a moving average perspective, that's probably the easiest way to look at retracement analysis, in the sense that you got three zones of retracement analysis. It goes from flags to standards to deep. And so you got your momentum patterns at the top, and then you have your traditional retracements, and then you have what is referred to as a deeper retracement. The problem with any deeper retracement here is it's going to break a pivot. And if you break a pivot, you're no longer bullish. And so the problem with anything deep here, that would have to lead into correction type conversations, which are not pullback language. Bullish correction in the market is categorized by a percentage from the very, very top and how much it gives to the bottom. A correction in the market would be categorized, for example, as a 10% pullback in the market. And so I think if you're looking at anything deeper, that would be a violation of trend analysis, quite frankly. And so you really got two zones here that you're looking at for pivot formations on the S&P 500. One is currently where you're staring at right now with the 9 EMA. That would not be that would be tough. There's not momentum here. And then the shallow pullback would you pick it up at 5,200 to talk about a 5,230 resistance level? And so you definitely either wanted to clean back up at resistance, talking about a potential breakout, which would put it down the road a little bit, or you probably want something more around the 20 period moving average instead of the 9 EMA here. And you do got a couple examples of a quick test against the 20 period here, quick test against the 20 period here. With a little bit of momentum here, that 20 period would look more as a standard 3-4 day pullback. That would look fairly decent. And I do think we let that play out a little bit. When you're looking at this pullback in the market, what we're really tracking, obviously there's 500 stocks here, but what you're really tracking is the pullback that is happening, not SHM, SMH, thank you.
It's amazing what different a letter makes sometimes, right?
It does, no doubt about that. But what we're really tracking in the retracement is the semiconductors. And the semiconductors obviously being the leadership of the market for quite a while now. They're going to be in front of the market's pattern. As a leader of the market, they're typically a little bit in front of the market pattern. And I would say that's the case here. You're in front of the market a little bit by about 1 to 2 days here. And so whereas the 9 EMA is kind of where the market is right now in its retracement, you're already to that 20 SMA on the bullish retracement regarding the semiconductors. And so the semiconductors could set up a little bit in front of that retracement happening in the market. You are in front from a retracement perspective. Now, the development here is going to be interesting here, Frankie. Typically, we see this zone of the rising 9 versus the rising 20 as a bull zone in the marketplace. Right. And so you're definitely expecting the 20 to play a role here. And you definitely want the 20 to play a role here, because if you give up the 20 here, you're giving up a little bit of the pattern here. And so if you give up the 20 and you start working a little bit deeper, that's going to have to go into King's Bet analysis. That's going to have to go into short-term consolidation. Let's see what happens next. But if we hold here against the 20 period moving average, let's bring it down into an hourly chart just to kind of show you here. If we kind of hold this level, start working off that pivot point right there and work back up into, it's not the cleanest flag, it's chop everywhere, but you start working back up into about 225 here, you could start getting into a little bit of confirmation from a bullish retracement. So it is in the SMH is in one of those situations where you're saying, okay, we could certainly see a pivot here, and we certainly want to be looking here, but we got to see something more than just a slowing momentum candle at that 20 period moving average. On Tuesday when we were doing the coaches show, I even said, yeah, if you like it off the 9, but I don't like 1 day pullbacks. A 1 day pullback to me is not good enough. And so to me, yeah, that looked good, but to me, this looks a little bit better than what we got on Tuesday with the confirmation of the 9 EMA. I like this pattern here. I just think we got to get a little bit of dose of confirmation. And I do think confirmation has to start at a minimum to get back up above the 9 EMA, and secondarily, probably get back up above yesterday's high before you are looking at some degree of confirmation. But so I would put the semiconductor, if we do get this to play out from a pure technical perspective, I'd say semiconductors look pretty good going into the first of the week. But you got to see some confirmation here. Anytime you give up momentum, you have to see confirmation.
Let somebody else go first, right?
You can't jump first. You can't jump first. Those algos will bite. And so I do think when you're bouncing off the 9 EMA, if that's your thing, like, you don't need to see confirmation there. If you work into standard retracement language, like we discussed on Tuesday's coaches show, and pro members, definitely check that out. Chock full of just pure education on how to manage bullish retracements. This one looks pretty good, but we need to see a little bit of a conclusion to the retracement story. And the conclusion in a retracement story is never a pivot at support. It is always based on confirmation.
Yep, absolutely. Well, I think the bulls could definitely sign up, even if they're not trading semis. It's always easier to be a bull when semis are moving up, right?
That's true. But I would also say the bulls right now, on the top side of the equation, the bulls have given up some momentum here. There's no doubt. We're going to talk about Adobe later on. Adobe had one of the first gap down analysis on an AI on an earnings result. They're giving up a little bit of their momentum here. I don't think we should be aggressive from a bull side at the top areas of the market right now. I think we should be patient and let them develop. And if they confirm, then let's see that momentum in that moment.
Yeah, absolutely. And that's always good advice. Always good advice. No doubt about it. Well, the only other real index that's interesting to me, at least, Maddie, is the continued battle for the breakout on the RUT. I don't know. Most of the other, indexes kind of similar vibes to the S&P. Then you got the RUT fighting hard at resistance and not winning, at least as of yet. I think the battle's still ongoing. I don't think it's, you throw in the towel just yet. It's hard to break resistance, isn't it?
It is, and it's really, really hard to break a resistance that is such a vitally important resistance level. This thing again got tested so many times over time. It's rock solid resistance here, and no, it's not going to be easy just to break out. But that's why we also like the opportunities that if it does break out,
Yep.
can lead to some really good momentum here. And so I don't think the selling behavior following a hot PPI release yesterday kills this trend. It certainly increases the volatility. We would certainly like to see a fight back up into 2100. And if we pivot here and we start working back up into 2100, you will have even a better argument going into that 2100 breakout, because as long as support increases over time and you shorten the distance going into that resistance breakout, you got to keep the breakout on your mind, because you don't get to pick when the market wants to break out. You get to make the decision when the market breaks out what you want to do about it. And so if we increase support here, because this right here, Frankie, do you see this little pivot here? Team tackle, is that a pivot that I'm going to associate with trend analysis? No,
I'm going to say no.
No. No, others might, but others aren't technically I don't want to say that. That was going to be rude. But no, a one-day pivot is not a pivot that you would put into a textbook saying, oh, do you see how this works in a higher high, higher low? Now, that's just a 9 slapper. That's all that is. Come down, test the 9 and keep going. This could be a legitimate pivot here. You got some standard 3-4 days to the downside here at this point. You're coming into a little bit of a deeper. That looks like it's a pivot. This right here absolutely is a pivot. This right here absolutely is a pivot. And so when you're thinking about that 2100 breakout, you got to pivot at 1935. This not a pivot. One day doesn't make a pivot. It's just volatility. Right here, 3 days down, 3 up. That's a pivot. 2K is a pivot. So we got a 1935 pivot. We got a 2K pivot, and we got a hypothetical 2050 pivot. And so as long as those support pivots are increasing, you don't have that much concern that, oh, the Russell didn't break and run, because it's not easy to break a multiple time frame situation. That's why we talk about it not over one day, but over time. And really what changes the dynamic of the breakout is not what happens at resistance, it's what happens at support. And as long as support is increasing, that's going to constantly put pressure on that breakout at 2100, that when it does, it's this pressure point that happens in symmetrical triangles, Frankie. It happens in pinches between moving averages. And it certainly happens when you have a horizontal resistance and you have a vertical support coming into that horizontal resistance. That puts a lot of pressure on the breakout. Oftentimes that pressure can lead to explosive volatility. And typically, because the increase in support is showing you demand going into the horizontal resistance, you typically get the momentum to the top side, not to the downside. Now, you flip this chart upside down, Frankie, I'd say the exact same thing as support. As
Yep.
long as resistance is going down and support is horizontal, it's going to put a lot of pressure on that violation of support. Same concept here, just at resistance. So it's choppy. It's not easy. I'm not trying to paint it as such, but as long as support increases here, we're going to be talking about the opportunity above 2100.
100%. Absolutely. And, you say it a lot, and it's true. Nothing dials in, volatility and chop quite like a breakout, right? So let's see if we can get that support level. Breakout is still there. It's just it's a tough fight. And sometimes we forget that when we're by ourselves, right? I think, oh, this breakout's fantastic. We forget that it's got to break out first, right? We're not the catalyst for the breakout. We just pile on. Love the analysis, Maddie.
And very quickly here, the fake out here, a little bit concerning, but again, this was a contract rollover as well. So
yeah. And
that
was basically one day, and you barely closed and no follow through. So only the most aggressive of the aggressive, multiple time frame traders are going to say that that's the day.
Yeah, put it simple. We have not closed above 2100.
Close and follow through. Those are really important concepts.
20. If we miss 30 points on the momentum of the breakout, we miss 30 points and we catch the next 200.
Yep.
It's you let this one play out, because if you wait on the close here, that would be a behavioral change. And that's what you want to see on breakouts, because what's happening at the breakout channel is stopping the market from going higher. You want to see that behavioral change, get that close. We haven't seen it close above 2100. So I think it's as simple as that. Regardless of what happens at support, I think a lot of traders can simply say, well, I don't care. If the Russell closes above 2100, we're good enough at that point. If IWM closes above, let's say 205 at that point, maybe we got something to look at here. So I just think it's got to be a confirmation conversation, and the Russell 2000 hasn't done anything wrong in terms of that conversation to get us off looking at the 2100 breakout here.
No, sir. It has.
Let me put it like this, Frankie. How long did we talk about that mid-tier breakout in energy?
Oh yeah, you mean
weeks.
A long time. Like the stuff takes, like sometimes it takes a while, right? We don't get to choose the speed and the timing of it all. We get to choose our timing and how fast we want to move in, right? But no, I mean, these things can take a long time to dial in, because we're on their time, not the other way around, right?
That is accurate. That is accurate. All right, enough with the indexes here.
Love it, Maddie. Love it. Well, let's take a quick trip to our old friend in gold. So last time we were together on Wednesday, we're kind of starting that conversation of the flag into the 9, and you said, you're pretty consistent with this. I don't really like a one-day flag.
I don't like one-day pullbacks.
Go figure. Figure. Here we are a couple days later. We are holding the 9 EMA. Candles are getting a little bit smaller, still in the, probably now in a little bit more of a traditional flag, I would say. Maybe not the cleanest flag of all time, but I would say it's more traditional than it was Wednesday when we were talking. As we're dialing this in, right? I know you kind of talked about, and I agree with you, the flag is fair, on Wednesday if we get the development, but it's really, can we dial in that next breakout over that 22? That's obviously a time conversation, right? Not necessarily a long time conversation, but you need more than one day realistically to get there. Is that still kind of where your head is at, kind of looking at dialing in, building this support level and dialing in the break, or is it done enough over the last couple of days to get you interested in maybe a front run scenario?
I do think it's done a lot more. I don't have the same take I did on Wednesday, where I'm like, no, I don't like one-day pullbacks. You're starting to really kind of build an intraday support level. The 9 EMA is now catching up to that intraday support level. Look at that 2160 intraday support level. You got the real decent trend line here on the flag. You could certainly say confirmation above 2176 on the flag. What I'll say on gold today is pretty simple, honestly. A lot of gold people I know, they are screaming at gold right now, saying, why are you not higher? Like, we've just gotten massive increases of a double dip inflationary concern, and you're not higher. And very good gold guys that know this conversation. Like, you should be higher, you should be higher, you should be higher. And my thing is, the thing about the gold analysis, they always miss one thing. They always miss one thing. They're right on the long term because gold will move up over time based on what we have seen in inflationary conversation over the last 2 months. But the thing about the inflationary conversation in regards to gold that the gold bugs always get wrong is hot inflation forces interest rates up, which forces the dollar up. And that will always confuse the gold people in the short term because they get the data that they anchor against forever. Gold people anchor against inflationary analysis from the dawn of mankind until today. And it's ingrained in their soul, gold as a protectionary asset class against inflation, against fiat currency systems. And I'm not here to argue against that because it's ingrained in my DNA as well. But that's long-term analysis. What you have to take into account in the short term in gold is the impact the United States dollar has in regards to the inflationary interest rate conversation and the divergent behavior that the dollar has against the gold conversation. And so when you're looking at, when people are asking me about the retracement in gold, the retracement in gold is not the retracement I'm actually breaking down. The retracement in gold is fine. I don't have a problem with the retracement in gold at this point. The retracement I'm actually tracking is the bearish retracement in the dollar, because when the dollar stops going up is when the timing on gold on the pivot is when you're going to see it. And so for me, it's not necessarily a gold conversation in the short term. For me, in the short term, it's a dollar conversation, because the dollar is king, queen, and country. Gold is not. The dollar is the 15 trillion asset class out there. The dollar reigns supreme. The dollar, and don't get me wrong, a lot can be said negative about the dollar. I've done many times. But when you're talking about the immediate impact of an inflationary bump up, its impact on interest rates that have to go up to reflect the inflation, and the interest rate going up will always increase demand on the dollar, because the number one trade in the world is not gold. It's not Bitcoin. It's not an equity. It's not NVIDIA. The number one trade in the world is a carry trade. And the carry trade, there are trillions and trillions and trillions of dollars worth of carry trades out there. And when the interest rate goes up based on that inflation, that carry trade and the gap between the US interest rate and the gap between the European or the Australian or the New Zealand or the Japanese, which is always negative, or the Swiss, which is always negative, that expands. And when the carry trade expands on the interest rate side of the equation, positive to the dollar, that's going to force the dollar to go up in the short term. And that's where the gold bugs get it wrong in the short term. They are dead right in the long term. Gold is a wonderful long-term asset. It's a wonderful investor inflationary asset. It's a wonderful protection against currency asset. The argument writes itself, but they miss the point on the short-term impact of the dollar. And that's what we're really seeing here on gold, is we're seeing gold reflect gold's not going down because inflation went up. That's not how it works. Gold's going down because the dollar has to go up to reflect the interest rate conversation. That forces gold to come down in the short term. That leads to buying opportunities, not the other way around. And so to me, it's more about seeing the dollar play out than this gold retracement. Does that make sense, Frankie?
Oh yeah, absolutely. And it's great stuff. Folks probably learned a little bit in that conversation. That's awesome analysis.
Well, and so, yeah, I do like it a little bit more, but again, it's more, you get a confirmation on the downside on the dollar. I think your timing is really good on gold.
So love it. Well, I appreciate that deep dive into that relationship, because sometimes
it's an easy one to forget.
It's easy to forget. And if you've never heard it before, right, hopefully you learned a little something new here.
Welcome to Tackle Trading.
Welcome to Tackle Trading. You probably hear it again. Well, hey, let's hop over to our pals at Crude. We started, we didn't start the show talking energy, but we started the show with the XLE chart up. So for reason, one thing that's been, really interesting and not super surprising coming up where we were coming from, but we had that really nice energy move, and really we just barely broke out in crude oil, right? We've barely got our breakout. Probably yesterday is what most people would say. That's what I'm going to say. At least we got our breakout there. You still have a bunch of room. This resistance level had been using that 20 monthly, right? That kind of been that last moving average it's been sitting on us. We finally been able to push through that. So this is kind of just the continuation signal that we're looking out for the second, whatever that is for an individual, having seen the breakout. Is that fair to say?
Yeah, I mean, if you're trading crude oil,
If you're trading crude
this
particularly.
this is a breakout. Yeah, and if you're trading USO, you probably want to see a high base get dialed in. Simple, not a prolonged high base, 2, 3, 4 days. Just let that 90 EMA catch up, and you're ready to get up and go there. To me, it's typically an energy conversation in regards
Right.
to oil. And for me, I felt like energy could get into 90. We're already talking 91, 92 already on the energy side of the equation, but I didn't feel you could break out of those 52-week highs without a crude oil tailwind. Like, yeah,
Yeah.
do I feel like almost any space breaking out of a mid-tier can get carried to the
A little
magnets
bit
of
of
the
run.
52-week highs? Yeah, there's a little bit of philosophy in us at Tackle Trading that mid-tier breakouts have a tendency to go to 52-week highs.
Yeah.
And we talk about those in the Delta Dogs all the time, but it's hard to see energy breaking these weekly time frames here, Frankie, without
It's a big
crude.
zone.
Like,
Right.
that is a massive pivot zone. And so 92 is it's no joke. This a legitimately important resistance level between 90 and 92 on the energy side of the equation. What I said in Discord earlier today was, if basically, if you have some energy trades out there that are looking good, and there's still some good that are setting up, but from a space perspective, I think you have to be looking at this going into some degree of consolidation as we start dialing in that next trade in. That next trade is not, let's try to squeeze some of the juice out of the orange, out of the energy. No, the next trade I talk about is being able to catch a 4.5, 6 point, jump on a breakout again, trying to catch a leg again. I don't get me wrong, everybody loves catching those swing trades, but when you catch a leg, you know what I'm talking about.
Yes.
It's a different beast. And that's where I kind of feel we're at here on the energy conversation. Is we're at resistance, we're overextended going into resistance, and we could certainly see some patterns get developed here, Frankie.
Yeah.
And
Yeah.
those patterns could be really compelling. And obviously, it goes without saying, at Tackle Trading, when we have momentum and trend, we are going to track two patterns when we get overextended. There are three basic patterns in a trend. You got the breakout, you get overextended, and you have the retracements. Right here on the energy conversation, we're at stage 2. That would be the overextended conversation. And when you're overextended, you're going to look at two different patterns. Number one is a momentum high base where you clean up resistance at 92 and you break out of 92 after the 9 EMA catches up. That's the first one. The second one would be a 2 to 3 day flag base pattern coming in to kiss up off that rising 9 EMA. That would be a very compelling pattern. I do think that would be a front running pattern going into this, but I also think it would be a really, really juicy front running pattern as well.
Right.
And so in terms of that, again, overextended conversations. I know everybody always wants to talk about those. Ooh, what's happening right now? To get ready for what's happening on Wednesday of next week, you need to understand this energy conversation today. And so in terms of that, this looks like it wants to set up over the next few days. Let's let it set up. It's an ongoing trading conversation. We have momentum in space. Now let's just let's track the trend. This is the first stage of the trend. This ain't the last stage.
No, absolutely. Dial in that. It's a big battle, boy. If it can break through all of that zone, and that's a big zone up on top of XLE. Not all the energy stocks are going to have it, but ooh, it could be
I kind of
interesting. It
like
could
it
be.
though. I kind of like that we're talking energy at the multiple time frame with crude breaking out just one day.
Yes.
Not crude at 90, And energy at the, like if crude was at that and energy was at that, I don't think I would have the same anticipation for.
Right. Yeah.
But with energy here at that 52-week high or near it, the gray line on the chart signifies that 52-week high. Well, that and energy, crude oil down here, if crude oil gets that tailwind, Frankie, you could see some momentum on top of 92 here.
You would expect to. I would at least. Yeah, love it. It's been a fantastic journey on energy. And that's why you dial it in. That's why you dial it as long as it takes, right?
One last point on energy. One last point. I think we all understand the overextended, overvalued conversation at the top end of the market, correct?
Yep.
Okay. What you're currently looking at on the heat map is the current valuation of the market, the standard PE ratio of the market per space. There's a couple green areas that stand out to me. There's a couple green areas of what you could consider still proper value. And despite energy being the best sector in the last day, despite energy being the best sector in the last week, despite energy being the best sector in the last month, and I remember doing that when energy was
You did that
fourth
a month
best
ago.
sector, and I said it's going there.
Yep.
Okay. Despite all of that, the one green area on the chart that stands out to me above all the other ones in a sea of red, that would be the energy conversation. And I don't want to discount Berkshire because Berkshire looks really
dialing in that weekly retracement.
Dialing in that weekly retracement looks pretty good on.
Yeah, it's a very intriguing look on Berkshire. Well, love the energy talk there, Maddie. Before we get to stocks in the news / earnings, let's do it. Let's head to church. You know, I think it was last night, I was just kind of browsing Twitter and I saw crypto crash and I was like, oh, red candle then happened on Bitcoin because it probably wasn't an actual crash. That tends to be what you see when there's a red candle on Bitcoin after a good run on Twitter. It seems to me at least finally getting a pullback, finally giving up that 90 MA, at least as of right now. Maddie, that's the first time in a long time that has happened. Kind of leads you to think that, I mean, it's Bitcoin, so you always understand what you're dealing with, but this is kind of where you would expect that more standard / traditional retracement analysis to begin, you know, as we kind of get into, you know, the mid to later parts of next week. At least that's kind of where my head goes with it.
Yeah, I think it, well, honestly, you were looking at breakout. Now you're looking at retracement. It's chop everywhere. It's volatility everywhere. Let it simmer down and settle down. The one thing that you'll always see on behavioral changes is if you give up patterns, typically volatility ensues.
Yep.
And that's what you did today on Bitcoin. You didn't do it yesterday. Yesterday kissed off the 90 MA the same way we did about a week and a half ago. That's not giving up the pattern. Giving up the pattern is giving up the 90 MA here, which means you've given up momentum. And this is the first day you've given up momentum. There has been changes in momentum and trend, but there has not been changes in momentum of trend and momentum of pattern. This is a change in momentum of trend and momentum of pattern. So you got to be a little bit cautious here. But, you know, Frankie, you know, I'll go to IBIT here. Okay, dealing with a little bit of pullback scenario. Was looking at above 42. We talked about that earlier this week.
Yep.
We talked about a little bit of better pattern development here. I would not hate a pullback here. Like,
no, not at
all. I think the entire market wouldn't hate a pullback in general to alleviate a little bit of the overextended conversation. But this is something that I do not have a desire to fight in terms of these 2 days.
Oh no, you give it the 9. I mean, I don't know how many days, but that looks like 40-ish days above the 90 MA. Mark probably knows the exact number.
He probably does.
When that changes, right? It doesn't mean anything other than that has changed, right? And when things change, we gotta respect it.
You gotta adapt.
We gotta respect it. We got to adapt.
You don't adjust, the market's not going to adjust to you. I promise you that.
No, it doesn't care about you, whoever you are, right?
Well, and again, like, would anybody hate a retracement here?
Not at all. You could see a scenario where you know, that IBIT, you know, as we kind of come into the back end of next week, maybe you get you know, a little more downward movement, but you slow down on Monday into Tuesday, kind of start to see intraday support on Wednesday, finally some upward movement in price on Thursday or Friday. you could see the path where the retracement, at least I can. That's
Yeah.
kind of what it looks like for me, right? It doesn't mean it's going to do that, but it does mean that I could see the path. And I do think that would be an intriguing scenario. So I'm going to be excited to track this as we get
Yeah. I
into
wouldn't,
next week.
I wouldn't hate I wouldn't hate a retracement here. Not at all. I will say this about Twitter though.
Oh,
I
there's
took
some
my daughter
interesting takes.
golfing. We took my daughter to her first golf tournament yesterday. A little practice with the other high school.
Okay.
A whole bunch of proud dad moments here.
Sure. Of course.
Whole
Yeah.
bunch of proud dad moments.
You,
But I got home. I was away from my computer for about 4 or 5 hours. Okay. Got home, logged in, didn't really check anything, just trying to get back into it, right? Yeah. And so I log into Twitter and see a whole bunch of zero hedge posts and all that jazz. And I'm not kidding, Frankie. Based on the conversation they were having on Twitter yesterday, I thought the entire market was 10% down. Like, I was just like, oh my goodness, guys, you guys are crazy.
yeah. I know better than that. I see stock market crash or crypto crash. I'm like,
Hot
red
takes
candle,
everywhere.
red candle.
Wow.
I
Wow.
did see
When did Twitter
fascinating.
become like make every tweet trend?
Well, it just depends what you're looking at. I saw a fascinating video on Twitter yesterday. A man with a prosthetic leg and his family were at the zoo looking at the chimps, and
Yeah.
he showed the chimp that was kind of looking at him. He showed him his leg, and the chimp was like, "Whoa!" and did this and brought his buddy over to show it to him. They were really blown away. So it depends what you're doing at Twitter, Maddie. I see a lot of videos like
all I'm
that.
saying is when I logged in, I thought we were going to be limit down just based on the Twitter conversation.
Yeah, I could see how if you hadn't seen that 97 times, then yeah, or maybe you just were not quite ready for prime time.
The hot takes right now are just cooking.
Extra spicy,
they
right?
are
Extra spicy.
That's all I'm saying. It's either the most beautiful thing in the history of mankind or the worst thing in the history of mankind right now. Every hot take's cooking. Everybody's on fire. 2024 is the year of the hot take. It is, and you guys are not disappointing right now on every level.
Oh, there's some interesting hot takes. Well, Maddie, that's going to do it for the Skyline, my friend. Before we get into Frank's charts, you know where we're going here. Stocks in the news, earnings roundup. I know you at least got one name you got to be talking about. So, my man, the floor is yours.
Yeah, we're gonna do some rapid fire here on earnings results here today. Interesting on Adobe. Adobe, one of the AI names, one of the AI leaders on generative AI front. Also one of the first AI companies to sell aggressively on an earnings release, not just this time, but over the course of the last few quarters. So a little bit of shifting narrative here on Adobe to a certain extent. Is Adobe a one-off? Does Adobe reflect a greater trend that we aren't seeing necessarily across the board, but we have seen secondary evidence of? I'm not sure yet. We'll have to wait and see on that type of analysis. But as of right now, raw numbers, good numbers on Adobe, good guidance, and yet a gap in a sell down behavior. Frankie, interesting to get your technical take here. 448 against 438 expectation. That's a slight beat on EPS. Revenue also slightly beat the expectation of 514, coming in at 518. That's in the billions. That's 5.18. Revenue up 11% year over year. They also increased quarterly EPS guidance while they maintained yearly guidance as well. Frankie, I was doing my scanning this morning, so I didn't have the detail of everything that was said in their conference call. I'm definitely going to check into that because based on raw numbers, I would have said this was probably market selling a little bit today, maybe a little bit of a gap ups, fade down type situation. That was not what happened here. There must be some context that I'm unaware of right now. So I will go and look into it. I will have something to say later on in Discord regarding Adobe. But for here, a little bit of an abnormal gap down and sell down behavior on what I would describe as raw numbers pretty decent and a guidance report that was also pretty decent. What's your thoughts here technically?
It's obviously it's ugly, but there's some interesting long-term moving averages in the mid 470s, right? You're gonna have the 50 and the 200 on weekly / monthly time frames. So that is a zone. You also have some old price in there. So there is a support zone in here. Obviously, I'm going to need a lot of development before I could trust that support zone, but it does make it difficult to want to fade and pile on, because if this area, and it's, roughly speaking, 10 or so points down from where we are, and it's definitely zony, in my opinion, it makes it for a tough area to try to play to the downside. Obviously, on the upside, I'm never going to chase that candle, for better or worse. Someone else can do that. So this feels like it's going to take some time to develop. Probably not going to be on the radar in the near future for me.
Yeah, I would agree with that. Adobe isn't one of those great trading names, I would say.
No,
It's not one of those stocks. Development here, you could see a few different paths, honestly. You could see one that is a really good short, and you could see one that is a really good long. And in those situations, I kind of just want to stay away too. I've always felt that if you can make equal arguments on either side of the ledger here, you're missing
they
that.
don't have to be equal. They just have to have a sensible, right?
Exactly.
Yeah, it seems like something not to mess with.
All right, Frankie, we got ULTA also gapping down, but firing back up here, Frankie.
It is.
Wide range candle today on Ulta. Ulta comes in with a beat on EPS, 808 versus the 749 expectation. Revenue also topped the 3.52 billion expectation, coming in at 3.55. Revenue was up 10% year over year, Frankie. They were a slight loser on the guidance side of the equation. Slightly lowered guidance was probably the gap down, fight back up. Mountain Dew markets here, Frankie, but a little bit of a mixed report coming out of Ulta. And typically speaking, and this is why I think I'm a little bit confused on the Adobe here. Guidance reigns supreme when it comes to earnings. This market is priced for the future. The guidance paints the future. It's not about what you did for me in the past. It's about what you're going to do for me in the future here. That's what this entire market is about these days. And you got a little bit of a gap down on a positive guidance out of Adobe. You got a gap down and fire back up on a negative guidance report out of Ulta. I would say Ulta got it right. I don't know about the firing back here, Frankie.
It's whether it's warranted or not, it's going to have to clean itself up for a little while, right? That was an all-time high that happened, just a few days before the earnings. You're gonna have to dial in all that, and then maybe we could talk about it. But yeah, it seems like a weird situation on Ulta, and which is nice, because generally, look how Ulta typically moves. Probably going to take a while to develop into something that resembles a pattern I like to trade anyway. So we'll let that play out.
Yeah. For the buyers out there, just fair warning, you're running into a hourly bearish retracement on that.
Yeah.
I don't like it. I don't like it, Frank. I don't like that look.
No, the gap down fire back only makes sense if it kind of gaps down into a buy zone and then rallies back up and challenges / breaks resistance, right?
And otherwise
it's kind of a
80-point range over a 3
day. Otherwise it's kind of, hey, some people jumped in on the low, and good for them. I'm glad. I hope it worked out for you, but it's just not
the
something.
People you're talking about are fake. Those are algorithms.
Well, listen, they have feelings too. I'm just being prepared. AI is coming fast. I'm just being prepared to treat them with the respect that they deserve.
Let's talk about another gap down here. JBL, Frankie, 168 against 168 expectation. Revenue came in at 6.77 billion. Expectation was 6.9. That resulted in a 17% revenue decrease year over year. They also dropped guidance. They got this one right. You miss on earnings, you drop guidance, you should drop in price, and basically you should give up your gains in the front running, and that's exactly what happens on JBL. Now, what's interesting on JBL, Frankie, I think you and I are going to see the same thing here. Gap down into the 200 and give us proper development at the 200. That can clean up the joint really, really quickly. Sure. That's why I don't like anything about the Ulta situation.
Yeah, there's not anything to anchor to. You basically have to anchor to the all-time high breakout at this point, right?
On a negative earnings. No, not a chance. Weekly chart here. You got a lot of support right around 120. On the daily chart, the 200-day moving average is right around 120 as well. Develop around 120, Frankie. Let's see if we can get a proper W formation here. If we do, we will probably put it on a report near you, but that would take 1, 2, 3,
Couple weeks
4?
minimum. Yeah, weeks. You're talking weeks minimum, right?
Oh, I'm not talking days.
No.
No, not talking days on that one. Frankie, Wheat and Precious Metals comes out with a positive earnings report here as well, Frankie. Very similar to the GDX conversation. Basically, what you're looking at Wheat and Precious. The only difference is substitute 46 for 30, and now we're talking about pretty much the exact same conversation on Wheat and Precious versus the gold miners themselves. Wheaton has a pretty decent earnings report here, Frankie. 36 cents against 32 on the expectation. That's a good beat on EPS. Revenue also topped the expectation, 313 million versus 287 million expectation. Revenue up 32%. Let me say that again. Wheaton Precious Metals up 32% on the quarter. Year over year. That's a wonderful report coming out on a raw numbers perspective out of Wheat and Precious Metals. No gap down scenario. Commodities are going to trade along with one another right now. They're running on the same gasoline. Frankie, I think you clean up 46. You got something to talk about here.
I do too. Yeah, I do too. I could see that path developing in the next week. You basically in a weird pinch, right? Where you got the 50 above us, the 9 below us, getting above that 46 or that high from yesterday would dial that in. Yeah, I could be interested. I could be interested over. That is yesterday's high. Make sure that is over yesterday's
2 days
high.
ago.
I could be interested. Yeah.
Yeah. The only issue with Wheat and Precious Metals is it's going to have a lot of competition.
It's got a lot of competition.
And let's just say it. There's a reason we don't talk about it as much as we talk about some of the other.
That is very true. That is very, very true. It's nothing personal, Wheaton.
Wheaton just usually loses. You're right. Nothing personal. They just usually lose to some of the other ones.
Yep.
Unless you want the silver kicker. If you want
the silver kicker,
you can usually do Wheaton.
Yeah.
If you want the copper kicker, you got FCX. You want the silver kicker, you got Wheaton. If you want gold, you got Newmont, Barrick, and a couple of the high flyers out there.
Yep.
All right. That's all I got for earnings roundup. The dog of the day has to, the dog of the day, I have to give it to Adobe. Despite the beats, the gap down and sell down behavior on an AI stock for the first time in the last few quarters. Despite the beats, I got to give them the dog of the day. I'm going to give Wheat and Precious Metal the best earnings report of the day, despite the overall price performance.
So love it. I'm kind of interested. I'm looking forward to throwing Wheaton into the ring with the other metals this afternoon. Yeah. Well, as always, Maddie, appreciate you doing that work. Yeah. So we don't have to. We know what the score is without having to dial in to that score. That means, Maddie, it's time for the officially the last segment of the week here on the Tactical Trading Halftime Report. Segment we like to call Frank's Charts because, well, I'm Frank and we're going to talk about some charts, and that's how creative we can get here on short notice. I remember, when we started doing this a couple years ago or whenever the heck it was, Maddie, like, what do you want to call it? I don't know. We'll just call it Frank's Charts, I guess. And, well, that stuck. So it's not the most creative name in history, but it is an accurate name. We
had Tino's Jams. That was creative.
So yeah, there's definitely some creative things out there, but
wait a sec. We also did a couple Matt's whiteboard. We're very creative.
We can get creative when we have to, but sometimes, hey, listen, you said, what do you want to call it? And I'm like, I don't know, just Frank's Charts, I guess. And well, here we are a couple of years later. Of course, this is kind of a little precursor to our scouting report meeting that we as coaches at Tackle Trading do every Friday, as we dial in our tackle newsletter, stock, options, and commodity reports for our pro members to get delivered to them here tonight or tomorrow morning. So they are ready to rock and roll heading into next week in the market, regardless of what they like to trade. If you're not a pro member, you know what I'm about to say. There's never a better time than a Friday to head over to tackletrading.com, sign up for a free 15-day pro membership, get access to those reports, as well as all the other awesome content we're doing, cash flow clubs, coaches show, daily lounges, right? Hanging out in our different Discord channels. I don't think you're going to find a better trading community out there. So if you've been thinking about it, not got around to it, never a better day than today to give us a try. And you can't beat free. At least that is what I say on a pretty regular basis. Now, Maddie, I'm going to bring 3. You're going to bring 3. I usually say where you want to go, right? About 80-20. I usually defer to you, but I don't trust you today because a name that you and I both love a lot is looking real interesting.
You
So
think I'm going to take your name? You do.
I do. That's when
And I might
I'm
take your name.
yes, that's why I'm going to take
Mm,
the first shot here
should I
today.
guess? Should I guess before you say?
Yeah, go ahead and throw in that symbol for me.
You're gonna, and again, we have not discussed this, guys. This is fresh, but me and Frank have commonality. I'm gonna say you don't want me to steal Travis.
That is
I'm
100%
gonna say
accurate.
you don't want me to steal Travis.
Yep, you are spot on, my friend. And see that's why I went first, because you probably were going to steal him, and understandably so. So for anyone who doesn't know, Travis Etienne is a wonderful running back for the Jacksonville Jaguars, and that is why we refer to Etienne as Travis.
We nicknamed some stocks. We do.
We did nickname it. Most of our pro community knows Travis now, but
Yeah.
sometimes you might have missed it. So they're
If you
not
get a
really
nickname at
Travis.
tackle, it's a sign of affection.
It is. And
And
ETN
unless you're Boeing,
here,
then I got a few other names for
well,
you.
yes, we have some nicknames we can't say on the halftime report, but I think people probably
PG
can get
rated.
an idea or of where they might be. I mean, this is just something, Maddie, that we have come to again and again and again over the last couple of years. It has quickly become one of mine, and I would imagine one of your favorite stocks. Not just because I mean, obviously the overall trend is fantastic, right? You take part of that at all, you're going to have good things to say about them. But it's just really been the consistency on
Yeah.
top of that. You know, most recently we had them in the reports a couple weeks back at the mid-February on the breakout, looking at a 300 target for our second target. Now we're dialing in that 300 breakout, right? And ETN here does have a tendency to what I call work the tens, right? Kind of just to work in $10 increments. Obviously, these are all-time highs. We're dialing in a pretty clean little short-term breakout here, just above these highs, 303, 304, whatever the exact number is. If we break, well, ETN has been pretty good to break out traders for a long time now.
Wow.
I think it's got to be on the radar if we do get a breakout here on ETN. So that's why I wanted to make sure I got him first, because I'm pretty sure you're going to snipe him.
I absolutely could have sniped him. There's no doubt about that. They were on my short list, and you are right. We do love us some ETN at tackle trading. I'm trying to think if there's another industrial name off the top of my head that when either you or I bring up this industrial stock, both of us like, yeah, we love that stock.
I don't think there is.
There's a couple.
There's something we really like, right? Like
I don't think
IR,
there's
for
anything with
example.
the affection of ETN yet.
No.
So yeah, I could have sniped it from you. There's no doubt about that. But
been a good choice.
You did it. I am gonna go, since you did momentum breakout, I'm gonna go clean breakout.
Okay.
I do got a decent breakout situation as well. Enjoying my scanning today here, Frank. SUZ here. Little name off the beaten path a little bit. Some of you may be unfamiliar with SUZ. If you are, don't worry about it. Make this just a technical conversation, because that's the only thing I care about on this conversation is the pure technical side of it. Do not have a fundamental take. What I do like is good momentum, good response on earnings, good consolidation, dialing in a $12 breakout. And when you look at that $12 breakout on that 30-minute chart here, Frankie, this is what you want to see when you get a breakout dialed in, guys. When we talk about the cleanliness of a breakout channel, and or whenever you hear somebody say, oh, that needs to take a bath. Well, this is what clean looks like. This is what it happens when you consolidate over a 3, 4, 5 trading session, and you really dial in that breakout on SUZ or anything that you're looking at. Then on the breakout, you get momentum on the breakout, and then you get a high base on the intraday analysis. This looks like a simple breakout trade against a high base with a 9 EMA catching after a positive earnings result. That looks really, really, really clean. And if this was all-time highs, I'd be like, just let that momentum play out. Problem is, it's not all-time highs. You got to come out to the longer-term time frames to understand the context here. But it does look like a pretty clean journey up to about 1280 by 13. I'm just going to call it Dan Marino's number, because I'm going to just say Dan Marino's number. I'd rather say that than anything else. So
sure you would.
kind of feel like 13 here is the conversation here, Frankie. And when you're looking at a 12, 15 to 13 hand, you're like, oh, that's not a lot. Well, the stop loss would go right underneath 12, guys. That's a 3-1, 4-1. You can structure a 5-1 reward to risk ratio trade here. Like it. It's a base hit type trade. It's not a home run, but it's clean. What's your thoughts here on
Yeah, it is. Yeah, I mean, and it's an interesting find. Great movement off of the breakout. Like you said, risk reward is clearly there on it. You get to use Dan Marino's number. I could certainly sign up for it.
What's not to like there? All right, Frankie. So we both got breakouts, momentum breakouts here. Momentum trend pattern breakouts is what we're both looking at in our first ones. What's your second one here?
You know what? I'm going to go out of the breakout and into a more standard, or as I like to call it, traditional retracement. It was running hot, but it's really started dialing in. And that's a name that you're going to like too, Maddie. Howmet, HWM.
I am so mad at you right now.
Did I steal it from you? Well, you should have. You should have. Yeah.
Oh, I'm so mad at you right now.
I'm glad I went first.
Not only was I was going to go HWM on my second pick, not my first one. I was actually thinking about doing it on my first one, but on my other screen right now, I have 3 different time frames of charts up, all with HWM on them. Frankie, you stole the thunder, you stole the lightning, you stole everything.
We can share it. I'm all right. I'm all right with it.
I'll share it. I do like it though. What's your thought?
Listen, this is I mean, these guys have been tremendous. All right. Tremendous recent earnings report. The trend has been fantastic. I don't even know what the heck happened on the aggressive sell-off. I don't know if there was actually news, nor do I really care. But it was a pretty aggressive sell-off over 2 days. And at that point in time, if we go back to that last big red candle, I'm like, you're going to have to clean up. Well, this is what getting cleaned up looks like, right, Maddie? Where you start to really build that support level, tested it basically all week long, right? So we've been building that support level on the intraday all week long. Buyers have been coming in, but they've not been coming in with enough to really give us that, momentum or a break of intraday resistance or anything like that. But it's looking like today that might be the day that it's going to happen, right? And if we can kind of get a little follow through off of this candle, that gets us right back above the 9 EMA, gets us lined back up. That would look like a W breakout on an intraday chart. That would kind of line up those intraday traders with the longer term trend traders as well. Risk reward is going to be really, really fantastic, right? Because, well, you don't have a lot of room between here and that support level. I think you'd be anchoring to the lows of this week. I think it's telling you that that's kind of how you're building the trade. So risk reward is going to look really nice regardless. I mean, that high that you see there was its all-time high. Obviously that'd be in play for a target, right? Maybe T1, maybe T2, depending on how aggressive you wanted to play the trend. Hard not to like it, Maddie. So I'm going to go with them, but I'll tell you what, I know you like them a lot. So we're going to share our official second pick, Maddie, and I'm going to give you the floor here with Howmet. What are you seeing? What I'm seeing? Are you seeing things a little different? What's standing out to you?
No. I see the same thing. I like this setup. Anytime you give up momentum and you work a little bit under the 20, we're specifically going to put it in King's bed territory. And this is a little mini King's bed, little up, little down, little up, kind of cleaning up that intraday chart. I've always seen King's beds personally. There's different versions of it, obviously, because King's bed are like short-term reversal situations, either on intraday charts or daily charts. But I've always seen it as kind of like a base, a low base or a high base where you don't have a lot of pivots in it. It's just a little bit of up, a little bit of down, a little bit of up, but it keeps it fairly clean against the base. And that's kind of what you have here on Howmet. When you're looking at the base here on the intraday, Frankie, you just look at this simple confirmation here. Like that's all you're looking for. And the daily chart kind of tells you exactly what you need to see. You just need to see it get above the 9 EMA here. And I think you're good. Long-term trends here, very solid long-term trends here. It's a really good company, HWM. Frankie, regarding the downward movement in price here, kind of come out of nowhere, right? It kind of came out of nowhere. So what created that volatility? Look, there was not a lot of news regarding that volatility. It is an aerospace and defense company, so I'm just going to associate it somehow got caught up with the volatility of how terrible Boeing is.
I'll allow it.
which which Boeing is fundamentally, technically, behaviorally, emotionally, spiritually, ethically, morally bankrupt. So maybe how it just got caught up in the algorithm volatility of one of those, 14 different instances over the last 2 weeks where there's been something going wrong with Boeing. So it could have been just something associated with that. But HWM is not a Boeing type stock. They're vastly different in the aerospace conversation. They're more on the aerospace, not necessarily aerospace and defense. So no, I'm a fan of the company. Not Boeing. No, no,
just to want to
no,
make sure that no one,
no,
yes,
no.
everyone knew, but I love the double checking because you don't want to be that
Nobody
guy.
was going to cut that nonsense. No, I'm not a fan of Boeing. Worst company in the market. And that says something. We got some devilish companies in the market. But HWM looks pretty good here, Frankie. The SUZ paper and product company.
Yeah.
Good little breakout. Frankie, they're not the only paper and paper company not breaking out, but I wanted to give my second pick, same type of space, dealing with paper, a little bit of a different pattern. And this kind of goes to dealer's choice here, right? You're not going to make 2 trades in paper, right? Unless you're working at Dunder Mifflin and and you're that guy. No, I was going to do a Dwight joke there, but anyways, one's a breakout, one's a standard retracement. The reason I brought up both in papers could just, I'm never going to turn down the education hat. I like to teach different patterns, and one's a clean breakout, one's a clean retracement. What I like about the PSTG, and I'm really kind of debating right now, is it SUZ or is it PSTG? But I like this one in one sense, Frankie. There's one specific thing I like in retracements, and where it's the last moment I no longer look at the retracement, because in the depth of the retracement conversation, you start with the shallow, you work into standard, and then you typically get into deep. Obviously, things can be different based on the volatility in front of the retracement, but that's pretty standard for us. The last moment in a retracement that I put as a go or don't scenario, and sometimes that can be in a deep retracement. Honestly, Frankie, sometimes that can be a flag where I'm like, I just won't like it if it doesn't hold the flag. And so we label these things in retracements where it's like you either pivot here or we no longer look at you type scenarios. I call those go or don't scenarios. And the go or don't scenario in a retracement is the best reward to risk ratio you're going to get in a retracement. It also just happens to be the worst probability you're going to get as well. But that's the game we play as traders. It's probability versus reward to risk. When you have increased probability, you have a worse reward to risk ratio. When you have less probability, you have a better reward to risk ratio. Breakouts have higher probability, but they do not have the associated reward to risk ratio with them that the retracements have. Retracements have less probability, but they're much more home run hits. Like the SUZ, that would be a base hitter. You're not going into that trying to do anything other than achieve 13. Here on PSTG, you might have a little bit of a different take here. And so what I like about the go or don't scenario here, Frankie, is it's not just the fact that it's a standard retracement here. It is a standard retracement. So why don't I say it can go deeper than here? The reason I say I don't think it can go deeper than here is because of the $50 handle right here. It's a significant whole number, but it's really what's happening on the intraday timeframes here, Frankie. You're starting to really pivot at support and build a support level right at 50. And so if you all of a sudden start selling off again, that's going to be tough to fight up against, quite frankly. And so to me, I kind of look at PSTG and I just say, okay, you got to go or don't scenario in PSTG, and confirmation would be above the 9 EMA. Or in paper and products, you also have SUZ, which is just a clean breakout against that $12 handle. So sneakily some decent setups happening in paper right now.
No doubt about it. That is an interesting look. And yeah, I can see why you're looking at it as the go or don't, because that's really lining up. But we like those situations.
We do like
right?
go or don'ts.
You know?
Well, they don't.
They're straightforward.
We don't have to.
I don't want to say they're easy, but they are straightforward.
We don't have to think about them though. Like,
No, you just like it
no, we
is what
don't.
it is. If I'm playing it, I know exactly what I'm getting into. I like it, Maddie. Well, for my last one, I'm going to go with a mid-ish tier breakout.
Okay.
So I got to pull back. I got kind of momentum. I wanted to bring up Kroger because Lord have mercy, that thing's beautiful, but
On my list too.
it's kind of already, it's another one of those momentum-y type ones, right? So I'm going to go with HPQ as my last official choice here. Dialing in, I look at Kroger. Goodness gracious, it's Kroger. It's a grocery store. Sometimes you forget those grocery stores can get moving. Just because they're grocery stores, they're usually boring, but they're not always boring. But HPQ here really dialing in that 31 breakout, as you can kind of see, Maddie. It's playing D, right? And now that 9 is catching up. It's going to have to come to resolution. Either that 9 is going to give or it's going to have to break, right, in the relatively near future. If the 9 gives, it would still be a breakout over 31. It just would be, down the road, maybe I'll revisit it. But if it holds and can push us through, and we keep trying, but it's hard to break resistance. But if we can break through, it's pretty clean, Maddie, and you do open up pretty nicely. In my estimation, you got a pretty sensible first target right around 32, which is basically an old gap zone that it worked with. But beyond 32, I mean, you're working into the mid 33s, 33.50 into the 34 range, depending on exactly where you're going to put it. So you have a decent window into approximately 34 with, a little bit, obviously there's going to be some junk everywhere from 31 to 34, right? We've been at all these locations before, but a relatively clean window on a relatively mellow stock that's really dialing in a nice little approximately 31 breakout. So I'm officially going with HPQ as my last call today.
Yeah, HPQ, a little multiple time frame breakout above 31 does not look bad there, Frankie. Do you want a bull or do you want a bear?
I'll give me a bear.
Yeah,
Give me a bear.
okay, I'll give you a
There's
bear.
a few interesting looking bears out there.
Yeah, Boeing.
Okay, yes.
I'm sorry. I will not dance on Boeing's grave today. Yes, I will. This is a terrible company. No, I was kidding with that though. I'm not going to do Boeing. Okay.
You just knew you could sign
I'm
me
not
up,
going to
right?
pitch Boeing today as a bear, but I could see some development of 180 to lead to a proper conclusion of a bear short underneath 180.
Yes, yeah,
Let's
see
keep
that.
that one. Let's keep that one in mind here. By the way, that violation would
Oh, it
be
was,
nasty
yeah,
violation.
yeah, exactly.
Keep that in mind. Proper development, though. We know how tough it is for the Bears out there. Seeing a little bit changing characteristics lately, though. Let's see if we can get to
Yeah,
a little fire.
yeah,
Frankie, Unity was a good bear from last week. It still looks like an ongoing conversation. Biogen's kind of kissing up against a multiple time frame bear situation. Caesars here, not a good look for Caesars in any capacity. That's going to be a conversation for the scouting report. I'm going to go with MDB here for my last one, though. Just want
that's
to
close.
put some radar candidates out there, Frankie, and I'm going to go multiple time frame here, and I'm going to multiple on the 30-minute chart here, Frankie. You got to break down on the 30-minute chart. You got a low base looking after that breakdown on the intraday chart. That looks like a secondary pattern that wants to continue to sell down there, Frankie. Let's go to the daily chart. What do we got? We got a low base following a terrible earnings report that gapped down, sold down, and then formed a low base. We're breaking that low base here today. Let's go to the weekly chart. Are we in a pocket? Yep, we're officially entering into a pocket between the 50 and the 200 SMA, which has to be 325 and a target here, ladies and gentlemen. But you're entering into a pocket on the weekly chart, which typically, what do we think about pockets attack? We typically have a tendency to fill those pockets. Let's go out to the monthly chart. That looks like a rejection of a breakout. Now you're coming down into the 9 EMA, which has acted as a support level on the monthly chart for quite a little bit of time now. Now you're giving that up as well. All in all, Frankie, every time frame does lead to a conclusion from the 30-minute chart to the monthly chart of additional selling here. And this nasty violation. Now, I don't think you can look for anything underneath 325 here. I think you got to be looking at 325. 325 is a major pivot zone for it. That doesn't mean it stops there, Frankie. It's just that's where you have to target there. You have to target this previous pivot, especially when that previous pivot is in conjunction with what we refer to as grandmama. By the way, I think I'm going to make a push to rename the 200 SMA on the weekly chart as Grandma Monday. Like I'm real close.
I'll allow it for a couple of reasons. One, Grandma Monday deserves it, and
She does.
two, whenever someone says Grandma Ma, I was a big fan of basketball in the early '90s as a teenager, and if you were too, you know that Larry Johnson was Grandma Ma, and there can be only one, and you ain't
Well,
gonna beat old LJ. Was a heck of a ball player.
yeah, I did enjoy watching him play some basketball. That UNLV team in the early 90s was
Oh my
a
goodness gracious!
fun team to watch. Um, they were made for NIL, I will say. They were
Yeah,
made
I can see it.
but yeah, that was a good team to watch. Grandma Monday team tackle is one of the nicknames that our grandmother had growing up. She was a hard woman. I got stories. I'm not going to retell those stories right now. She was a hard woman. Love our grandmother, but she was a woman of the Great Depression. That everybody knows what that means. But after watching the movie Dragnet as a young lad, we started referring to our grandmother as Grandma Monday. And so I kind of feel like Grandma Monday makes a little bit more sense for the 200 here. She can hold. She's a ferocious woman. She can hold. She can hold against the most volatility. She'll bring her rake and her hose, and she will do whatever she has to do. That's the 200 SMA. But Frankie, MDB would be my pick here going into rapid fire. And we're going to clean up this show, and we're going to head over to the scouting report meeting and
Yeah,
curate
absolutely.
all those reports right now. Give us some final thoughts.
Yeah, well, as always, thank you for having me, team. Have a fantastic weekend. If you need anything from me, you can always reach out to me over in Discord. I would always, of course, if you like the show, it always would appreciate a like, a share. It really helps us out, and we do appreciate it if it is helpful for you to do that for us. This week, Maddie, in the stock quarter, the last couple of weeks, I've been breaking down the different ETFs. We did the sector spiders. I do that every quarter after earnings to kind of adjust their weightings, know exactly what we're dealing with. Last week, we did kind of the big popular ETFs that many of us use, like SMH, for example. Going to do it one more time this week in the stock report. Some of the lesser names, some of them aren't super liquid. They're more tracking, but going to break down, solar. We're going to break down medical devices. So I know some people have really enjoyed that. It's not a ton of work, but it's easier to make me do it than to go through all of them yourself. So check that out this weekend. Most importantly, thank you for being the best community out there. Love you, Team Tackle. Have a wonderful weekend. Maddie, my man, take us out.
Yeah, final thoughts from me, very simple. Weekend routine for us at Tackle Trading is the scatter reports, the Tackle Trading newsletter, dialing in and getting ready for next week. That's kind of our weekend job. We're going to get those reports to our pro members. And if you ever want, usually in Discord, in the step channel, I always put the watch list when we get them done. So if you want them a little bit quicker than we post to the website, I will always put those into Discord, the Step System channel in Discord for our pro members there. That's number one. Number two, the Coaches Show on Tuesday. We just got done with a 3-part series. It was really kind of 2.5-part series. We did the bullish retracement on Tuesday, but the last 3 weeks of the Coaches Show, I've just really, really enjoyed. And hopefully our community enjoyed those Coaches Shows as well. We did 2 weeks on AI. This week was really on the bullish retracement. This week coming up, this Tuesday coming up, get excited, guys. I'm going to be teaching how and when to play a contrarian trade. And so we're going to do a little bit of contrarian technical analysis, but here's the kicker. There's always a time frame somewhere. But we're going to talk about contrarian trades on Tuesday's Coaches Show. And so I'm sure we're going to have a lot of fun on the Coaches Show on Tuesday as well. So get excited about that. With that said, if you guys need anything from us, hit us up at team@tackletrading.com. You can always hit us up in the Tackle Trading Discord. And if you're looking for an amazing trading community of like-minded investors navigating the financial world together, helping each other out, which puts a great emphasis on the educational side of the equation, come join Tackle Trading. Come join the community. Test it out. You'll enjoy it. I promise you. We'll work with you until you do. So let us know
100%.
what you need. Let us know what you need and we'll help you out. So with that said, you guys have a wonderful rest of your day. Enjoy a beautiful, it's about time we got some sunny days out there, Frankie. It's a sunny day out there today. Enjoy a little bit of the weather if you do have it this weekend as well. And make sure to hit that like and share on the way out the door as well. Have a good day, guys.